Howdy, hotshots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. And I want to talk about something that Tom Lee just said about Ethereum. He thinks that Ether, will outperform Bitcoin. He says if Bitcoin has a 10x in the future, Ether has a 50x in the future. Now, I don't know about you. I started buying Ether when it was around $900 a coin. I have like 3.5 coins-ish. I don't have a ton of it, but it's almost $4,500 right now. Last I checked was $4,460. So it's already performed quite well. But he seems to think that there's a lot of room for it in the future. Now, Bitcoin has been termed, digital gold, all right? And we saw gold and silver performing really well today. GDXY is something that you really should be looking at if you're looking for income, but you want a gold play. Now, they are synthetic positions, so what they're doing is buying deep in the money calls and then selling shorter dated out of the money calls in like a poor man's covered call type situation. They're able to get representatives of more shares, but it does cost them some premium. So that's what these synthetic positions typically do. Now, you could look in the fund and maybe they're doing some other, weird stuff, but that's typically what they're doing is they're buying deep in the money calls far out, and that way they have less time decay up front. And then they sell shorter term out of the money calls, which capitalizes on a lot of time decay, and they're able to generate outsized premiums in the near term cumulatively over the life of their in-the-money call, or at least that's the idea. And the Roundhill Ether covered call income fund, YETH, or I'll call it YETH, is looking to do the same thing with Ethereum, or Ether. Ethereum is the blockchain, Ether is the coin. Anyway, Tom Lee seems to think that a lot of these other coins and a lot of these programs run on Ether. So it's not like Bitcoin. Bitcoin is a store of value, and it is pursued by companies, and so they're stockpiling it, which is in turn making the price go up. But they mostly just have it sit there. They don't do anything with it. Ether actually gets burned, and it actually gets utilized to run other programs, other coins, other blockchains on. It's got sub-blockchains. They have blockchains that they put on the Ethereum blockchain that will run more efficiently than Ethereum itself. Because sometimes, if you've ever dealt with cryptocurrencies, if you're trying to send or do any transactions on Ethereum, there are times of high traffic where it is very expensive to get any transaction done. Like it can, and it moves up quickly. And so it's not very cost effective, especially for smaller transactions. So they'll have layer 2 blockchains built upon that blockchain that can do things much more quickly and more efficiently. Now, personally, I like XRP. I like XRP for the long term because it's something that I can easily understand. It's something that's built for cross-border payments and quickly settled transactions, and it costs very little to do a transaction. And if you've seen a lot of these people out there that preach XRP all the time, they think it's going to replace the world reserve currency. XRP is going to right now banks run on Swift. They'll send money back and forth on Swift, but it's pretty expensive. If you go to Western Union and send money, it's pretty expensive. So people want to see XRP take over that global financial market and have all of the transactions done through XRP, which is very, very quicker, very much quicker, very cheap. And it's also very transparent. You can see where the money was sent from. You can see where it's sent to. And so it can be more secure that way. And I hope that that's what happens. I don't know that that's what happens. I find it very hard to believe that the World Reserve Bank or that the Federal Reserve Bank is going to allow that to happen. I feel like if they wanted an XRP type blockchain to do all of these transactions on, rather than allowing you and I to get very wealthy by owning something that was available to the public for so long, that they would just make a copy of it. And then they would run it on their own, and they would just, cut us out of it. And so I feel like I own XRP. I like XRP. I think long-term XRP is going to do very well. So a lot of lawsuits are behind them. But I do find it very hard to believe that the global governments and global financial system is going to cut you and I in on the deal, unless they need our money to pump it up, which they don't if they just copy the blockchain and then they control the whole thing. And then maybe at that point they would start selling it to us. And by the way, we all know that the governments and government agencies created Bitcoin at this point now too, right? Like you guys do know that, or at least I'm assuming you do. So Bitcoin really was like an experiment, and honestly, they say you can't create any more of it. I'm not savvy enough to know whether you can or not. And on a side note, I actually think that with the quantum computers that they have nowadays, if they wanted to just delete Bitcoin, they probably could. So I don't even, it wouldn't take them very long to hack into all of the Bitcoin wallets or just delete the chain entirely with the quantum computing capability that they have. So I do like crypto. I think it does have a lot of value long term, but like many other things in this world, even though I think it has a lot of potential and it probably will do well, I do see faults, I do see risks, and I am a skeptic. But Ethereum actually already has a lot of programs running on it. It generates a lot of money for this for people that are staking it. It's got a lot of transactions on it from a lot of different angles, and it's got a lot of money that has been put into infrastructure around it. And Tom Lee seems to think that it can 50x. Well, if it 50x'd from here, what would that be? 10x would be $5,000. 25,000, 10x would be $50,000. 25x would be, so 50x would be $250,000. I got an early flight this morning, so my math might not be mathing perfectly, but I think it's $250,000 a coin, ish. If that happens, then that's a meteoric rise. He seems to think that over the next 10 years. Now, you can buy Ether on Coinbase or, buy it on some other swap website, or you could buy it at any kind of brokerage. You could buy ETFs that have Ether in it. But if you want income off of it, you're going to have to make some other kind of play. And so Roundhill has this Ether covered call fund, and the distribution rate on it right now is 69.62%. Looks really good on the surface. Okay, and they are using the synthetic covered call strategy where they buy deep in the money covered calls, and then they sell shorter dated out of the money calls. It's a good plan, and it could work really well. And with the volatility that Ether has presented in its history, I could see the premiums being very large and making up that 69% yield. I am curious about why it hasn't performed well since it started. It started June, late June 2025. So it's only a couple months old, and it's already down 18%. And now I want to know, is it down 18% because they were getting their footing? Is it down 18% because they're making poorly timed trades? It's obviously going to cap the upside. You're not going to have as much potential upside growth in YETH as you do in Ether, okay? Because of that covered call strategy. We've talked about it a lot with Ulti. We've talked about it with GDXY. Anytime you have a covered call strategy, it's going to cap your potential growth. Now, something that is, volatile, but still over time it's growing slowly, is the perfect covered call play, because you're going to be able to capture the premium from the volatility, but overall your premiums are not going to be completely overshadowed by the growth that you would have had you held the asset instead of selling the premium. But Ether has done pretty well since the end of June. Since June, it's done really well. And so I don't know why there's this inverse relationship between YETH and Ether. Even at the 69%, you're only looking at roughly 6% per month in yield. And it hasn't even been out a full 3 months yet. So that 18% that it has gone down, you can't even blame that completely on the distribution. So I'm contemplating buying into this fund. I like the idea right offhand. I've talked about it. I like Bitcoin. I like Ether. I like XRP. So basically anything that's going to generate me an income off of those assets, I'm interested in. And so I may still wind up stacking some YETH, but I'm going to play it very slowly, and I'm going to stack it little bits at a time, because it could be that it was just a new fund, and we've seen a lot of these higher yielding funds. They start out at a price and they just down right away before they find their base. And that might be the case. And if so, this could be a good time to buy it. But then again, it could just be a poorly performing strategy. And if that's the case, you don't want to have a big chunk of your portfolio tied up in it. So I would like to hear from you guys and see what you think about the future of YETH, what you think about the future of Ether, and why you think that it has performed so poorly compared to its underlying asset in just a couple short months. All right, D-Gens, I'll talk to you later.